From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 12, 2016. In just a moment, we'll be taking a look at the AUDUSD, the Australian dollar, versus the US dollar for today's trade analysis. But first, a recap of a couple of the suggestions made over the past few days. Starting here on the USDCHF, yesterday's morning analysis video talked about buying on dips into the support zone after a breakout of what was resistance and turning into support. Happens to be the purple shaded area at the very top of the chart. We saw the market push through there. Let's go ahead and zoom it in a little bit here. We saw the market push through there. We did get a small little candle by the opening closed above 98.55. Then the next candle opened up and it just started going back up without any real significant sit down on support into 98.55. That's what I was looking for yesterday. I was looking for it to sit down as support on top of the purple shaded area. Just never did it, and now we see it all the way up at the orange zone. So it never gave me a clear opportunity to get in other than just buying, just to buy it above the purple shaded area. So didn't get into it. If you did, of course, you should be protecting profit at this point as it rallies towards the orange shaded area. We move on over to the USDJPY. This is a trade that I suggested for members on the trade notifications after the trade room yesterday. It was a buy close to the 103.20 level. You can see the buy going on down there at the bottom of my chart, 103.20. Currently sitting about 55, 54 pips of profit as it has now bounced off the support. We were in an uptrend. We saw the market find resistance at the orange zone, bounce back to the green zone, bounce back to the orange zone, and made a new higher low into the green shaded area. So that's what I was looking for yesterday, was the retest of the green zone. A buy scenario into there has now been profitable as we're targeting the orange shaded area. Of course, the trade is already at break even. Can't lose on the trade, so even if it suddenly turns around and goes down, we can't lose on the trade. But current target is the orange shaded area at 103.95, 10400. And of course, if we can break through there, if the market goes significantly bullish on the US yen today, we look for it to break through the orange zone and continue to pressure higher. The risk was pretty low at that point. It was a break under the green zone. So at least at this point, trade paying out as expected. You can look to the left-hand side where the blue circle is. That was a similar scenario that we were looking at on the left-hand side yesterday during the live trade room. And that's what I'm basing my trade on here for the US yen. And again, currently sitting 54 pips of profit. You should be in profit or protection mode if you are trading this US yen. Okay, let's move on over to the AUDUSD, Australian versus the US dollar. This one a little bit tricky yesterday. We did see an opportunity to go short. It broke underneath what was support and then acted as resistance. But the market had a little bit of a different idea and pushed through that resistance towards the next resistance level. We'll see that a little bit better on the 4-hour time frame. Of course, I always need to remind ourselves of this long-term trend, that red trend line there, because it is an important factor in all of our trading over the past several weeks here for the Australian dollar, that long-term weekly red trend line. Take it down to the daily, you begin to see how the market has been around that red trend line for quite a while. Zoom it in again here a couple of times. You can see there's the red trend line. We can see it challenging up into there where the red circle is. You see it challenging where the black circle is. And even if you put another circle in here, let's go ahead and throw another circle right about right here and make it black. Actually, I'll make it a different color so it's different from the other two. Let's make it this blue color. So right there where the blue circle is, you can see resistance again around that red trend line. So that's what we've been working our trading information off over the past few weeks, is underneath that trend line. Of course, it could break it and go higher, but that's what, at least so far, it hasn't really done that on the weekly time frame. Selling rallies into resistance. It did push underneath the yellow zone, 75.50, 75.65 yesterday, so we were looking for the continuation towards the green shaded area, but the market, again, like I said, had a little bit of a different idea and turned back above there. Now we're looking at the pink shaded area, once again, as resistance. Over here, it was support. Over here, left-hand side of the chart, it was support. Even on the far left-hand side of the chart, we can see resistance into that pink zone. So that's what I'm looking at today. Of course, along this black trend line, we see falling highs over the past few days. Falling highs under resistance, that gives us a better idea to go short than it does to go long. You don't want to go long into resistance. Let's zoom it in one more time here on the daily time frame. So this pink shaded area here, and I'll put a black arrow, around 75.90, 7600 will be our resistance for the day today, and only if it breaks the black trend line in 7600 will we look for it to go higher. So that's resistance. So if we're going to go short and sell this currency pair, we want to get as close as possible to that. I've already set up a pending sell at 75.90 into that pink zone. Hopefully that will help us and allow us to capture back that little bit of a loss that we took. It was about a 30 pip loss on the first trade yesterday into the yellow shaded area. Let's discuss that one a little bit more. 4-hour time frame again. We can see the market. In fact, let me zoom it out one more time. We can see the market finding resistance into the yellow shaded area for several hours. In fact, we did see about 15 to 17 pips of profit on the trade. So it wasn't a bad trade. We did see over 15 pips of profit. It just never went deep enough for us to protect the trade with the stop loss, but which is 20 pips, and I would have done that. But 75.50, follow it back in time. Look at the resistance back here. And eventually, of course, it did break above it, but there's resistance there. There was support here at the yellow shaded area. So it gave us a reasonable expectation of low risk, high reward, sell into the yellow zone. Like I said, we did see 15 to 17 pips of profit. So it wasn't a terrible trade. It just didn't continue to go down in the direction that we wanted to go in. Then it pushed back above the yellow zone, and now touching close to the pink zone. Of course, we've seen historical support and resistance along the pink shaded area 75.90 before. So that's the area that I'm looking to focus in on today. The pink zone 75.90, looking to go short. Of course, your risk just above it, I would say, into the lows, 7600, 7620 maybe for our stop loss. That way, if it breaks above the pink zone, we get out of it again and look for a new opportunity. The yen trade, of course, has outweighed the loss that we've taken. So if you close the yen trade now, you've closed into profit already. But I think we can look for another opportunity here. Rally into the pink zone becomes an opportunity. Break through the yellow zone is our next hope that we'll see for it to break back down through there, and then we look to target back down to the green shaded area. We are finding some intraday support on top of that yellow zone, so it may be prudent for one of two things: either rally to the pink zone or break under the yellow zone for our next sell. Buying it right now, I just don't think that this is a good opportunity to buy it under the black trend line, under resistance. So I'm looking to go short, and we'll wait to see if the market does do that. And we do have some event risk today. We have a couple of speakers from the FOMC, early part of our U.S. trading session. Then later on today, 2 p.m. Eastern U.S. time, FOMC meeting minutes. So we have some event risk that could cause the U.S. dollar to jump around a little bit, but keep an eye on that, and hopefully we'll see this pay in our direction over the next several hours.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.